Welcome to the Housing Provider Show, where today I have a special guest, Dorian from Alpha Adjusting. Dorian, how you doing?
Oh, well.
I know what you do now, but I've seen you present a few times at events, and I've talked to you a few times. But I guess explain to everyone sort of what public adjusting is and what you do for people, and then we'll take it from there.
We are considered experts in the area of establishing what the damages are and what the value of damages are in the event of a property loss. So you'll end up with a fire or water damage, a tornado, whatever that may be in the Chicago metropolitan area in particular. The insurance company is going to send an adjuster who gets to walk and talk with that individual in order to determine what the scope deserves to be, what is the pricing that is appropriate to make those repairs, how much depreciation is to be taken, and then there's other aspects that get into what the policy covers and doesn't cover and how it gets interpreted a little bit. We're not attorneys, but within the realm of adjusting practices, there's certain things that we have impact and influence on, and the goal is to have a seat at the table in a way that ensures the property owner is going to recover. I like to call it retail plus. They're smart guys. They do it for retail, wholesale minus. There's a little bit of a spread, but that's why we're in the business, and you got to take every opportunity that comes your way, even when it is a bad situation. You can't just throw the keys at somebody and say, I don't want to deal with this. What do you do? How do you come out of it
So why
whole?
not just use why not just let, if I have State Farm or Farmers or Allstate or whatever, and I have the fire damage, why not just let their guy, I mean, they have adjusters, why not let them do it?
Well, they always have adjusters, and they're going to have an adjuster who we're going to interface with. So I don't care who the carrier is. The reality is, this is a very subjective business. If you've ever had a series of contractors, you got three contractors, or you want to do a project in one of your buildings, how many different
Hmm.
prices can you get? Which one is right? Is there a right one or is there a wrong one? You might, in that situation, you might prefer to get the cheapest, but then you have to compare apples to oranges to say, what am I getting for product? To answer your question again, it's a very subjective business. Somebody needs to craft a story that the other side, the company side, says, well, maybe I don't really agree with you, but okay, I'll pay you for that item. And you move on to the next element to be identified in the claim.
Hmm. Hmm.
Without that opportunity to talk to these people, when the page is blank, it's a very crucial part. We essentially we set the stage right from the first time we pick the phone up and say, hi, how are you? We're on the case. We'll see you there at 10 o'clock on
Hmm.
Tuesday. Okay. That's the world that we inhabit. Um, and it takes some cajoling. It takes some precedence creating events in the past. It's a very small world that we're in. We see the same adjusters time and time again. They're going to say yes to has an awful lot to do with how it's presented, who presents it, and you got to be right. You can't be just throwing things on the wall to see if it sticks and think they're going to give you, oh, we'll split the difference. If I throw a lot on the wall, it'll get most of it. That's not the way the game is played.
Hmm. You said blank. You said blank sheet of paper, blank slate, whatever you want to call it.
Yeah,
What's the?
thanks for bringing that back up. So when the page is blank, that's the opportune time to walk and talk and create consensus. Listen, we can be adversarial, but there's no reason to be adversarial when like-minded people can come to a consensus about what is there. And an awful lot of that has to do with straightforward, simple explanations that are bearing on the experiences that we have had in the past with the same adjuster who happens to be at your building today. But we saw him last week. 6 months ago, 6 years ago. That's where the precedences are set.
Hmm.
Unlike in a courtroom. Your Honor, in 1985, this case was decided this way, and this one should be too. Well, we don't have that. We have what's between people's ears and how they left the previous negotiation with us about scope, pricing, depreciation, all the elements that go into a case.
How much of the so they come out, et cetera, they're going to cut you a check. How much of it is the luck of the draw of what adjuster you get versus the company you're with? Like, do different companies have different adjusters or different rules, or what plays more
So,
of a role there?
a little bit of both. Every company has its own culture. Every independent group of adjusters have their own cultures, and then individual people have their own points of view. So, operations like State Farm or Allstate, they have travelers, they have their own 9 to 5 staff adjusters. Many other companies, GNY, Merrimack Mutual, Andover companies, raft of them, do not have their own field adjusters. They have claims examiners at home office, but they're going to send an independent adjuster. That independent adjuster will be at any number of different shops that they feed their business to as essentially like a 1099 contract.
Mhm.
So these adjusters are working for lots of different insurance companies. So in that particular situation, who that adjuster is and what shop he is coming out of has more bearing than the company he's representing, because
Mhm.
he sees things the same way every day, regardless of what the company that he's working for in is thinking about something. They were relying on his eyes and ears to establish the value of the loss, and it's kind of third person. But there's differences in all of that. There is no one size fits all. There's no silver bullet here. There's no solution other than you got to work with all of the individuals that we see on a regular basis.
So value of the loss is obviously the number one thing we're talking about. But so have you seen changes in that value, and our insurance companies keeping up? I know us having a maintenance company, everything is twice as expensive as it was 4 years ago, 5 years ago. Are insurance companies keeping up with that, or are they still trying to
Yeah,
get 2019 prices for everyone?
yeah, they are. So that price list is updated every 2 weeks.
Mm.
So the unit pricing for labor and material is reliably up to date. The program itself has lots of different little bells and whistles in it, and you can check a box here and check a box there and uncheck a box there, and you get a very different result. And so you really have to know the ins and outs of that program. Tracy Murphy, my 40 plus year partners, Kurt Yearwood has been my partner for over 40 years now. His oldest daughter is in our shop. She's been with us for in excess of 20 years now. And there is nobody who knows this program as well as she does. It's frequently the case that company adjusters are calling her even on a case that she's not involved with and say, "How do you do this? What do we?" And so she's
Mm.
coaching them a little bit because she gives an honest answer to a question,
Mhm.
which is at the end of the day what we trade in. Let's have an honest assessment. You're not going to give me something that I don't deserve. I'm not going to ask for something that I don't deserve that's completely out of bounds, because I do not want to insult your intelligence. An awful lot of people in the industry don't look at it that way, but the
So
clientele
how
we
much?
have it speaks a lot for who we are.
Yeah. How much? I mean, you talk about relationship with the girl that works for you, and being able to talk to all these adjusters. How much does that relationship matter? Someone coming out of the blue or versus someone that's
Tremendous,
yeah.
tremendous, tremendous, tremendous. Um, we've had we've had situations where kind of a new company side adjuster is in the mix. He shows up at a property. He's got a couple of guys in tow who are the building consultants. This is another element that's changed in the last 10 years pretty dramatically, where the insurance companies have removed a lot of authority from their actual field adjusters, and they're asking for another layer in the claims process by bringing in a building consultant, which is a quasi contractor type, and theoretically they're supposed to know what the really cost, kind of a thing. Well, as in anything, you're back to the same problem we had in the beginning. How many different contractors have different opinions? So, but we've had situations, and there've been a number of them over the years, in which the company side adjuster drank what we call the Kool-Aid about anti-public adjuster. And so
Mhm.
he's going to start arguing about everything and anything. That is
Mhm.
ridiculous. He doesn't know what he's talking about. And the consultants who have a established relationship with us and recognize that we know what we're talking about, and if we tell you we need to be paid for something, we give you a good reason, and you can go, okay, all right, maybe I will pay you for that. And they've gone, hey, he's one of the good ones. Stop
Mhm.
doing what you're doing in order to change that. So the relationships really matter. Um, Clearly, the insurance company has responsibility to their insured, but they don't look at it as being heavy-handed one way or the other. If their field adjuster says it's A and B and not C, then they're going to say we agree with him. And so whether that individual who's in the field, boots on the ground, is saying yes or saying no matters a great deal. And like in anything, the element of
So yeah,
persuasion
so
is
experience matters, and knowing them matters because from what you told me before, there's not like a definitive law like there is in court where you can say, "Hey, you have to do this." It's really to their discretion.
it, it it's very subjective. Um, there are situations in which, as it's very rare in our office, but we've certainly seen it a number of times. I'm referring to the appraisal process. So when there is when there are irreconcilable differences between the carrier and the insured, either side can demand appraisal. So you may feel very strongly you're entitled to be paid for X, and they're saying we're not paying you for it. And if there's enough money at stake and the insured is confident that he's correct about it, they can demand appraisal and remove the existing adjuster from the case on both sides. That means they would have to change whoever is representing them out, and then you go
Mhm.
through essentially appraisal process. Nine bind it's arbitration essentially. So
Mhm.
each side picks a new entity, and then the two of them choose an umpire to come up with potentially a different conclusion because it's fresh eyes and it's intended to be a third party, disinterested third party is the new entities.
How often does something like that happen?
It doesn't happen that often. There's times when it deserves to happen, but the cost financially, and more importantly, the cost in time is daunting. So
Mhm.
the fact is that there are plenty of situations where the companies are not doing what they should in the right way. And what do you do with it?
Right.
You can be as right as you want, but if it costs you $50,000 to take a case to court, do you do that? Or you settle and you bite your tongue and you do what you can do? It's the same problem you have in the legal sphere.
Yep.
Okay.
Yep.
I've got a case right now where a prospective tenant was about to sign a lease. They were in final vetting of the lease with the attorneys, and a fire broke out that day. They sign the lease a month later. Isn't the building owner entitled to loss of rents for what would have been rented in reasonable fashion? Well, I got a company adjuster saying no. He's dead cold, stone cold wrong. We first of all, we know it. Second of all, the attorney crowd who we are close to, and everybody's in complete agreement. So now, as the case comes to a conclusion, at some point we're going to make a decision. What do you do? How much money's at stake? What's it going to cost to get? What other
Mhm.
issues are there? So it's not always an easy option to say you're wrong and I'm going to do X, Y, and Z. There's a cost of justice, and unfortunately, it's a little pricey in an awful lot of situations.
So I want to go back to, or I think we will go back to the time it takes. I do want to talk to you about that, but you mentioned loss of rent. I think a lot of people don't quite understand what it is and don't. uh, The other question is what insurance policies include it, what
Agreed.
don't? Because I've seen landlords get stuck with, oh, my agent didn't, unfortunately, I think insurance people bottom price shop a lot. And so that
Yes.
causes agents to take off things
Yeah.
because they want to win. If I have $1,000, I can get to 700 if I take off this, this, and
Yeah.
this.
Right.
I used to be one, so I understand it. That's why I got out of the industry. Is it never sat right with
Understandable.
me.
Right. Right.
Um, but yeah, but so I guess go a little bit into what loss of rents is and when it gets covered, when it doesn't, or what you sort of seen with that.
Okay. Yeah. Yeah. Good. The common thinking is I got an apartment that rents for $1,500 a month, and I have a loss of rents for 6 months, so I'm going to get 6 times 15. That's the gross rent. That's not the case. So loss of rents is a form of business interruption. So you can have a restaurant, you can have a manufacturing operation, you can have a retail operation. It's all business interruption. And for all of these, under all those policies, a business interruption policy insures any insured for fundamentally net loss of income, not the gross, the net. What's on your tax return as a net number, and add back in the continuing expenses. So let's say you have a Six Life building that is going to be vacant.
Hmm.
Are you going to have garbage service while it's vacant? Are you going to have
No.
water? Are you going to have repairs and maintenance?
Mm. So they're
All of
deducting all
those
those
things
out.
are
Okay.
non-continuing. Now, so you take the net on the tax return, and then you build back. Taxes certainly continue. Mortgage interest continues, not principal. Principal's net income, right?
Mm.
That's part of your net. So you add back those things. It takes some massaging to get to where you want to be with that. There's a lot of subjectivity in the way I think all of us as owners, we make decisions about what to expense. And we're probably all been guilty as landlords. I am also, have been since 77. Um, we front load a few expenses. If the IRS
Mhm.
were sitting over your right hand shoulder, you might go, well, I think we got to capitalize that, and okay, we'll put it on an accelerated time
Yep.
amortization rate, but it deserves to be capitalized. Well, to the extent that an owner um, front loads expenses as opposed to capitalized improvements, that net is going to be smaller than it would have been.
Mm.
So what do you
Mhm.
do with that? So we will make an attempt. A guy puts $10,000 into a roof because he's going to do one section every year, for example, and it's reasonable that he's only repairing 30% of the roof. So is it reasonable that he's taking it as an expense? Yes. Is it a one-time expense? Yes. So we will make the argument that says, this is a one-time expense, or this is an isolated situation here or there, in order to try to get the net to be as high as it deserves to be, because that's the starting point.
Gotcha. I got one more question that I just thought of when it comes to landlords specifically. I think one of the hot topics that's been going around lately, and I think it's because insurance companies are trying to sell it, but forcing tenants to have renters insurance. How often? I think there's a conception that if the house burns down, you're gonna be able to put it on their insurance and not yours, or et cetera.
I'm not an attorney. You can talk to plenty of people about that, but we, I don't believe in the city of Chicago you can force the tenants to have insurance. Number one.
Hmm.
Number two, as a building owner, I would always be happiest. We ask people to have personal property protection. That would also include not only protection for their personal property, but for their additional living expenses. They got to move out right away. Well, they can't find an apartment where they're going to have to go to a hotel. Who pays that bill? Okay.
Hmm.
Um, and then, of course, there's a liability side. We've had two cases in recent times where the tenants were deemed responsible for the fires, and they had, I think it was Lemonade Insurance or something they got online. Okay. But each one of those policies paid out $100,000 in liability coverage to the carrier who paid the insured building owner.
What you're saying is it still went through the owner's insurance.
Right,
He
right.
still
Yeah,
gets the ding for having, because that's what a lot of these
right.
people think they can escape,
This is,
right? They think
this
they can
is,
escape.
they can escape it. But now, so let's go to something that's a little bit, um, if you have a significant fire, you're certainly going to call your insurance company. Okay. But
Hmm.
here's what, on the smaller stuff, to your point, on the smaller stuff, um, you don't want to be on the radar screen with the carrier. I understand that. We encourage people not to make frivolous claims. If you can afford to eat it, please do, because you pay for it later. There's no free lunch. Number one. The party who caused the damages.
Hmm.
Let's say you got a strip mall and somebody ran into the building and knocked out a storefront. Okay. Well, if they've got a good carrier and it's a clear liability issue, maybe they will step up and pay the claim. When are you going to find out? What happens when they delay their tactic? They use a delay tactic and drag their feet. What if they're a third-rate carrier who are just like, well, we don't really think this is the case, and I mean, what
Hmm.
do you do with that? That third-party entity, that driver's insurance company, has no responsibility on a first-person basis to the building owner.
Hmm.
So if it works out, great. But if it doesn't work out, what do you do? I've had situations where we had one in Oak Park. You just jogged my memory, in which the guy had a reasonable policy. The loss was below, it was under $100,000 in damages. And the building owner said, "Oh, I don't want to make a claim." Well, the guy came up with an offer for like 30 grand. After fooling around with it for 6 months on his own, he finally brought it to me and said, "Hey, I can't do this." Okay, so we're going to file a claim with your own carrier. The claim doubled in value. And then his own company chases the other company. That's
Hmm.
subrogation. So the best way to do that, if you get lucky and you got a good carrier and nobody's shirking their responsibility, God bless you. But if that's not the case, you got to go to your own carrier. If they collect a deductible, you receive your deductible back. If it's under the law, these things happen. But it's not. I don't encourage people to seek solution through a third party
Yeah.
carrier that they have no connection and responsibility to.
So you gave the explanation of it, of them playing the stall tactic on the third party thing. I feel like sometimes I see it on the first party too. So I'll ask this question:
Absolutely.
Why does it take so damn long for my clients to get their checks?
Hey, wait. Insurance companies play the float game really, really well. You take a big check and go to the bank. You put it in deposit. And they say, oh, we're going to hold the funds for 10 days. Really? When you put that check in the little machine and didn't didn't the banks go boom, boom, boom? Money moved from here to here?
Mm-hmm.
Oh,
Mm-hmm.
it did. Yeah. Oh, yeah. Oh, but you're not going to let me have my money until when? Okay. It's the same kind of situation, is partially. There's also the fact that you've got bureaucracy. You have a bureaucracy without a doubt. It's not programmed to be a checkbook. Um, Illinois is a reimbursement type state. You're technically supposed to have the money to make your own repairs and be reimbursed by the insurance company.
Mm.
So
Interesting. Okay.
the better quality carriers are going to offer an advance because they're that kind of operation. But if you start getting into surplus lines carriers, I've got one case right now that is from last November. We only got an offer on it a month ago. We knew what the numbers were going to be, but the carrier didn't officially give us because there's 5 carriers involved with the risk. They're all surplus lines carriers. And
Break before you go. Break that down. How do you get 5 carriers involved with the risk?
well, no individual carrier was interested in taking on the risk. So the
Mm.
broker, there's programs like this, and so there's 5 different insurance companies, and each took a percentage of the overall risk. Well, now you got to get all 5 of those guys. So the company adjuster meets with us. We come to an agreement about it. They got a building consultant. We come to an agreement. Fine, fine, fine. And now you send it back into the system, and now you got all 5 of those carriers have to agree before anybody sends a check.
Oh wow.
Oh
That's
yeah. So that's the shits. I mean, plain and simple. If you land up with that kind of carrier, it's probably because it's not, nobody does that. And no broker's going to feed you that kind of carrier situation if they don't have to. That is not. You're first of all, you're not with a standard carrier with a surplus lines. Surplus lines carriers are permitted to work in the state of Illinois, but they do not contribute to the Illinois Guarantee Fund, such which is if they go bankrupt, have a nice day. You have an open claim with them, you're not going to get paid.
so you're talking about surplus lines. You're talking about people not taking risk, and that brings up. I'm going to ask you a deeper question on insurance, and I know it may not be exactly your field, but it's related to you. But are we going to have insurance in 10 years? I mean, I feel like we're seeing more and more of these companies back out. I mean, I talked to some people that have HOAs that they can't find insurances
Right.
because they have certain kinds of roofs. I've heard stories of, Allstate won't take you unless your roof's under 5 years. Like at some point, like there's going to be houses that are uninsurable. And I'm sure it's already happening in Florida and California, but like,
It is.
where are
Yeah.
we going with this?
I was talking with a guy at Lee Kaiser has a so this topic's been floating around for a while as premiums have gone up. Um,
Mm-hmm.
and this guy in particular said insurance is the next big thing. It could make affordable housing completely unaffordable. So
Mm-hmm.
we've already started to see premiums that are $1,000 per apartment per door per year.
Yep.
Well, how do you pass that number along? So I don't have an answer to your question, Tim, but the reality is that the carriers have been pushing risk back onto insureds pretty dramatically. There's been a shift for traditionally in the vintage buildings like I own, we buy replacement cost coverage. Well, that entitles you to plaster if you decide you want to put the plaster in. Okay. Well, what happens when they write a different kind of policy that says common construction method? Well, that means you don't have oak, you got plywood. You don't
Yep.
have oak casings. You don't have vintage anything. Okay, so that's it's a suburban white box, which might be fine, but again, you got to know what you're buying, and so this is a way in which they are pushing risk back on insureds. Um, Many of the policies are saying if your roof is not 15 years or younger, we only pay you the depreciated value of the roof. So let's say you got a 20-year-old shingle roof on your building and it's year 15 or 16. What's the value of what's on that roof? Oh, it's going to cost you 20 grand for a new roof. Well, let's say it's a small house. 20 grand for a new roof. Oh, you're only going to get $4,000. Oh, and your deductibles, by the way, 2% of the policy value, which is another way in which they are pushing risk back onto insureds.
What do they?
We saw a lot of this in Florida where they got percentage deductibles, one, two, three, four,
Hmm.
five. Well, if you got a $50 million policy in a complex and you got a 3% deductible, you do the math.
Yeah. And it's 3%, just for everyone out there. It's 3% of the 50 million, not 3% of the claim.
Exactly, exactly.
I think a
So
lot of people sign up and think it's, oh well, if I have a $2,000 claim, it's 3% of that. No,
no, no,
it's.
no. So I mean, I got introduced to a woman who had a fabulous three flat with a garden unit
Hmm.
in South Shore, and she had a deductible that was percentage, and she had the building properly insured. She had backup of sewer and water. The deductible is 50 grand. What's she going to do with that? Nix that apartment.
Hmm.
You might take you 50 to wreck it and remediate it. Probably a little high, but okay. It's what the carriers are doing. It's it's a problem. I don't know how it resolves itself. The profit motive is certainly driving an awful lot of this, but it's also reality. It's a bottom line issue. What do we do when our costs go up? Gas, insurance, water, maintenance, what you name it, in our buildings.
Hmm.
What do we do with it? We eat it. Sometimes, yes, we do eat it because we can't. Market may not absorb the price increase that we need to get. But how long can you do that for?
Hmm.
Carriers are the same way. I mean, the amount of money that State Farm's lost in last years is astounding. But they're passing along big price increases and restricting coverage, and I don't know where it ends. They have to make money. Um, we understand that everybody deserves a margin. If you work, you deserve to have a margin. Okay, great. How everybody pays the bills, though, especially in the face of the changing climate issues, and this is
Hmm.
really the frequency of fires is actually less than it used to be. The trip and falls are the trip and falls. So it's a, there's a lot of data on that, right? That's a pretty level playing field. It doesn't jump up and down. But the storm losses are where these companies are just getting hammered in places. I've seen articles about in Keokuk, Iowa, kind of a thing where they got hail claims and people are pulling their hair out because now, to your point, oh, they got a condo association and they can't get insurance
Hmm. Hmm.
and they're in the middle of cornfields. You think that's like safe? No, it's not. I don't know what's safe anymore.
Yeah, no, that's a good point. You're talking about policies. We talked about deductibles a little bit and looking at it, and like I said, I know there's a lot of brokers out there that are they're commission based. They're going to try to get the sales.
Yeah.
They're gonna they sneak in a 3% thing and you don't see it. I know a few years back, State Farm was trying to get everyone on the 1% or whatever it was. I don't know if they're still doing that, but beyond that one, just a couple quick hitters. What are some you get there? You're doing everything, and you realize the policy doesn't cover anything because they didn't take blah 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 amendment or or whatever part of the policy. What's one or two that's a big regret of some of your clients for not making sure is on the policy?
So I think I think in general, people need to, when they consider taking a larger deductible, and I've got some guys who run $50,000 deductibles, and I got a couple of them who are running $100,000 deductible, but they're big enough cats to be able to manage that. Okay.
Hmm.
But whenever anybody considers taking an increased deductible, They really need to do the math. How much premium am I saving if I go to a 5 or 10 or a 25,000 deductible? Okay.
Mm.
The carriers have um, don't like selling backup of sewer and drain, but it's a really important. If you have a finished basement area or a finished lower level or a garden apartment or something, you're crazy not to have that kind of coverage. Although that is becoming increasingly difficult to get your hands on. I had a property that had relatively minor water damage. Um, but the following year, they cut my coverage in half, and it's with a good
Mm.
carrier. Okay. I made some efforts to see to it that that doesn't happen, but I plugged some area drains into commercial bathrooms. Not the best situation, but if I got a little bit of water and it spreads out and causes a lot of problem, what are you going to do with that? So
Mhm.
when we replace the floors, instead of going loose lay on top, we'll on a commercial, even in some apartments, I'll go a vinyl plank flooring glued down because if you suck that water up promptly, you're going to save the floor.
Mhm. Mhm.
But back of a sewer drain is important to have. Um, think it through, find out how much policy you've got, think about what your exposure is, remediation costs, especially in the face of an emergency. If there's a lot of claims all at one time, these companies are not coming out and doing that kind of work for cheap. Number one, um, code upgrade, very important. Especially if you have a vintage building, codes change. They don't change all that often on the one hand, but what happens when I've got a client now where they had a relatively new 800 amp service in a commercial building.
Mhm.
And the city came in and said, no, well, after the loss and you got to do all the load calculations. We want you to have 1,000 amp service.
Mm.
The materials alone for the 1,000 amp service are $45,000. Just the materials. And
Mhm.
all the stuff that was put in, like, maybe 10 years ago, you're not using any of it. Doesn't match up. Have a nice day.
Yeah.
Big numbers. What happens when they hit you for a water service?
Mhm.
Okay. So once you get to a certain percentage of damage, when the city comes in and says, we want you to bring the building up to code because you've hit that level. Okay. You're not going to get an option to say no. You better hope you have the coverage. I had a water service replaced in one of my buildings. It was $30,000. Okay.
Mhm.
So you cannot afford to do without that coverage. People should look carefully at the policies to see to it whether or not they've got any kind of a percentage deductible, whether they've got replacement cost coverage or common construction. Business interruption. When you normally get a multifamily policy
Mhm.
um, from any of the carriers, you almost always have business interruption there.
Yeah.
So the big thing people need to think about, back to your point about how brokers sometimes are a little more concerned with whether they get the business or not. So this is another way in which the carriers are pushing risk back on insureds. We saw it 35 years ago. We saw a lot of it. Um, it's back in favor. Coinsurance.
Mhm.
Coinsurance it's simple, but it gets a little tricky. Most brokers don't seem to explain it to people properly. If you've got a building that's $1 million in value, forget what you might buy it and sell it for, and um, you have an insurable value of $1 million. Let's not get into depreciation on this too much, just to make the
Yeah.
point. So let's say you have a relatively new building. Its insurable value to replace it today in the marketplace, given costs today, is $1 million.
We're saying a
On a
million.
project. So you got $1 million property, agreed value, and the policy says 100% coinsurance. Okay, you bought this building in foreclosure and you stole it. You
Mhm.
only So you said, I'm only going to buy $500,000 worth of coverage on it. We're never going to have a loss. It's all new construction. Okay. Oh. Really, have a loss, I don't care how big it is, you're going to get 50 cents on the dollar because
Hmm.
you are operating as a co-insurer for the value of the risk that you did not insure for. If the policy is 80% co, you've got to buy $800,000 worth of coverage at a minimum in order to get dollar for dollar recovery from the company
Hmm.
on the risk after a loss. So um, people frequently mix this up with health insurance and they think, oh, it's 80/20. I pay 20% of the bill and the carrier pays 80. No, that's not what it operates on in property. It has to do with insurable value and the required amount of insurance versus how much you actually bought.
Yeah, and I think it's a common misconception. I think too many people, and again, going back to too many people price shop and only look at the price.
Yes,
And co-insurance is an
it's a
easy
serious
way.
mistake.
The other one I see I'll throw out is just being underinsured in general. And it may not be called co-insurance, but
Oh,
you
yeah.
bought the house for 200,000, like you said, it was a foreclosure, but it's going to cost 500,000 to rebuild. Um,
Yeah,
if you're only
right.
insuring 200, you're not getting that. You're not getting the value to rebuild it.
No, no. And even if you don't face um, um, knock the building down, you know,
Hmm.
down to
Yep.
grade, you could have listen, a one-bedroom apartment fire these days is usually a buck and a half.
Hmm.
Okay, hello. So if you stole that little single family, you cannot possibly replace it for what you. And maybe that's okay. Maybe that's the kind of risk that that particular investor is willing to accept, but they need to know that. And I think to your point before, people who shop by price and not actually comparing apples and oranges, they are putting themselves at a risk that they may never come face to face with. But invariably, these things happen at the least opportune time and when you are least able to take the hit, in my
Hmm.
experience. So we don't like to be insurance poor, like raising your kids. Pick your battles, decide which kind of risk you want to accept because it's coming for you one day.
Yep. No, for sure, for sure. So we're running too close to the end here. Obviously, before we get into, I want to ask you a few fun questions before we wrap up here. But I think we could probably talk for another 2 3 hours if we had the time. So hopefully we can get you back on here in a few months and do a part two of this. But
Sure.
a few rapid fun questions, and this is a show for property investors, and they're trying to get to the point of being able to either just enjoy life better with the money they have or using properties for retirement. So the questions are sort of related on that. But favorite place to vacation is the first one I'm going to give you.
All right, run the question by again. Two text
Where's
messages ran up.
sorry? Where's your favorite place to vacation?
One of the daughters near Boston, one of the daughters in um, uh, New Orleans, and we're of the favorite places to go is probably in the winter months, New Orleans.
All right, last question. This is why we like having people that are also investors, as well as expert matter or matter expert or whatever you want to call it. But one investment regret you have with any of your properties, whether it's buying something, selling something, doing something that 10 years later you're like, oh, I shouldn't have done that.
Do marriages count? Yeah, there's a property that I had for a single family residence for a hot minute in Evanston that I really wish I hadn't. It was a bad set of circumstances. The timing was completely off, and then I just had to
Hmm.
bail out of it because I didn't want to carry. Yeah, I didn't want to continue to carry it. It really needed more time and attention and direction, and had to get involved with the permits and the legit way and the city and this and that, and it just was going to go over the top. And it was just like cut the losses and move on. Although had I held on to it, it probably doubled in value at a minimum.
I think that's something we hear all too often is real estate. You got to take care of it. I forget who told me this or where I heard it, what podcast or whatever. But you got to take real estate. You got to take care of real estate for 3 to 5 years, and then let it take care of you. But too many people get in the weeds in the first few years, and they have some issues, they have some problems, and they jump ship really quick. And I think that's
Yeah.
something a lot of people can learn from.
Real estate is a long-term game. In my opinion, most of what Kurt and I own, we've had for 39 years now.
Hmm.
And if you see my properties and you see what we've done to them and how we tend to them, we consider ourselves stewards of the building. They were here
Hmm.
before us. They're going to be here after us, and the things that we do to them to maintain and improve them are with that concept in mind. They're going to be here. We've owned them for 39 years already. Everybody calls and says you want to sell it, and it's like, no, the kids are going to probably get it one day when I'm gone, but I got a long time to be here still.
I think those words of wisdom is a great way to end it. So I want to thank you, Dorian, for coming on. And like I said, I hope we can have you come on again. And I think we could talk for hours on different stories that you have and things that you've seen in the insurance world as well as being an investor. So thanks for coming on, and we will
M-
get this
My
out to
my
everyone.
pleasure,
And
Tim. It was delightful. Thank you very much. It was a lot of fun.